These things are so important because we have a system that doesn't really prepare people for the world of investing. It doesn't prepare people for the world of being financially independent. You're taught to be a worker. You go into work, you do your 9 to 5, you come home, you put your money in a low rate interest savings account, and that's it. And you do that until the day you die. You retire at whatever age, and then you struggle on your retirement. What they don't tell you is along the way, there are things you can do to protect yourself.
All right, guys, welcome back to the Breakfast Show. So we have the one and only Maurice Innis with us this morning. How you doing, champion?
Good morning. Doing great. Great this morning.
Good. Enjoying
Sun shining.
Yes.
Weather's great.
Uh-huh.
I think summer's here.
Yeah, it's time.
Get it on.
It's time. Vitamin D on us and all that kind of stuff. You know, everyone was all talking about the things that we're doing to get more in shape. You're doing your ice and lemon stuff.
I'm doing apple cider vinegar with in iced lemon water.
Okay.
In the morning.
Hey.
And at night, lemon tea with a teaspoon of apple cider vinegar. So
go.
Very good. Very good for diabetics.
Okay.
People that want to lose weight.
All right.
And blood pressure.
Okay, look, there's a wellness tip already. We ain't starting now. We already got a wellness tip. Yeah. And and just to add to that, also, like I've started to today will be my first day and a new routine of going gym on Tuesdays and hopefully Thursdays as well.
Very good.
With my wife. We're going to be on it. So I'm doing the free celery sticks with almond butter. And on Tuesday, I'm going to go to the gym. And everybody in here is walking like crazy on the street, taking in the vitamin D. So all of us, Breakfast Show faithfuls, I know you in there as well. We're going to be having a good time and looking healthier this summer.
I love it. I love it. So next time we see you, you're gonna be like Michael Jordan.
That's it. You know, look, guys, if you haven't checked onto the YouTube channel yet, all the Breakfast Show interviews, Maurice's stuff, Ronald's stuff, all our guest stuff, previous interviews, all that stuff is on the YouTube channel, Robust Life TV. You can catch all the replays on that, and it's just the interview sections, all right? And on there, I think I'm gonna start sharing like my journey, so I'm gonna do a thing. I won't be depressive about it, but I actually I'm like 27, 22 stone. I wasn't happy with myself. No, it's not going to be like that. But I'm going to I'm going to robust it, and kind of let you know the journey and how we're getting along. Yeah.
Love it.
So we have our Breakfast Show faithfuls here. So we some of our talkers here. We've got Selena. She says, we have to move on because I know you got some good stuff to share with us. Selena says, I'm enjoying the celery challenge. It was hard in the beginning, but I do see the difference. It felt weird eating almond butter with celery, but it takes away the unnecessary cravings. Wow. Tobias says, good morning. Paulette from Plaza says, good morning. Or Midjuli says, good morning, Maurice, and welcome back. And Fatima says, morning, everyone. All right. So let's keep it coming. Let's keep the dialogue up. If you've got questions for Maurice, feel free to throw them in the live chat, and I'll try to interject points so that we can keep it flowing. But guys, now is that time for the pursuit of success. Let's increase our financial IQ with Maurice. Thank you for joining us, Maurice.
You're so welcome, sir. You're so welcome. Great to be here.
All right. Now, so what we're going to... Now, I know previously we've spoken about... we've gone some really powerful stuff. Obviously, you taught us about increasing our financial IQ, what we really earn. You've spoken about what inflation is, capital gains. So, just to kind of sum up briefly, these things that you're sharing with us today, why is it important?
These things are so important because we have a system that doesn't really prepare people for the world of investing. It doesn't prepare people for the world of being financially independent. You're taught to be a worker. You go into work, you do your 9 to 5, you come home, you put your money in a low rate interest savings account, and that's it. And you do that until the day you die. You retire at whatever age, and then you struggle on your retirement. What they don't tell you is along the way, there are things you can do to protect yourself. And as I say, this is really important, not for people to get rich and do crazy stuff and go wild and show off. No,
it's like golden rings and golden teeth.
Gold
It's like,
teeth,
look at my gold shoes. It's like, look at my gold sneakers. I done it, mama. I done it. So,
got to buy a diamond ring and a horse.
diamond ring.
You know?
I got 4 of them.
No, it's not.
So what now? What next? I could get gold contacts. No, it's not about that.
No. It's not about that. So it's about freedom, and it's about options and the ability to choose where you want to go. You're not a leaf on the stream, just being taken wherever wherever the stream takes you. You take control of your.
Yeah, and I think this is so
Your
important. This is so important because many people feel like financially they don't have control.
Correct.
And that's a frustrating thing because cortisol, that whenever you feel stressed, many things are probably happening with your weight because you're feeling stressed. There's that lack of control, and it's like many people are accustomed to be taken by the wind. It's like wherever it is, and people consequently don't have hope in certain other areas of their life.
Absolutely.
And if we can get control of this area, our finances, it can make a huge difference.
Huge difference. I read a few years ago, pre-pandemic, pre-recession, that middle-aged white men in America, the actual rates of suicide was going through the roof. Yeah,
it was in the UK as well.
Really?
Yeah, we have it higher than women.
Yeah. So what was happening there is one of the determining factors were a lot of blue-collar jobs were disappearing. Some of them were going overseas. Some of it was due to automation, some of it was due to technology, some of it was due to outsourcing. So these jobs that these guys relied on were no longer there. The guys are at home. They're the breadwinner. They no longer feel like a man. They no longer feel useful. They no longer feel, like the head of home. And they were choosing to delete themselves from society.
Wow.
Very, very sad. And this is pre-pandemic and pre-recession. So this was happening 3-4 years ago. Huge problem. People also turning to drugs. There was the opium crisis. People are struggling. People are really, really struggling. So this is super important. It's not a solution for everything in life, but it is. I think that the number one cause of divorce is financial issues.
Yeah, that's it's a huge one. And okay, so we're gonna get into and I'm glad you said that. And most of our listeners, a lot of our listeners, they're in faith, right?
Correct.
And suicide, hopefully, is not in the forefront of their mind. But that whole thing about having control, is huge. So we can have a strong spiritual life, but I've even touched it in a Monday service yesterday. To have options, to have control. So guys, get your notepad and pen ready because we're about to go in. All right. So Maurice, what we're going to be looking at today?
Okay. So today we're going to be looking at what kind of investor are you? Are you what's your risk tolerance? Are you a plodder? Are you a long-term investor? Are you a medium-term investor? Do you want to see some returns over a few months to a year? Or are you do you have a vision to be like a short-term, so like day trader sort of thing? So determine what you want, have a strategy for what you want to achieve. You want to be a short-term trader, a mid-term trader stroke investor, or long-term investor, right?
So just to kind of take it back a bit. All right. So we're going to be looking at, we're going to be covering investing again, right? The subject of investing. So investing in stocks, shares, right? Companies, right?
Yep.
Yeah. So and this is the best way to make money work for us, right?
Absolutely.
Many people go out, they make a monthly pay packet, and they spend it all. They spend it all, and a lot of the times we could have held back a bit and consciously put aside a bit for investing, because those who consider themselves the elite, right? That's what they do because they make money work
10%.
for them. 10% of them. 10% of their earnings or 10% of the population?
10% of what comes to you, 10% of what comes to you, that goes to your spiritual life, that goes to your financial endeavors, whatever those endeavors are.
Okay.
Yeah. It takes a while. It's quite tough to do, but you know, that is the premise.
Okay.
Also, dividends. We're going to be touching on dividends as well.
Excellent.
Right. So if you
Excellent.
don't know about that concept or don't know how it works.
Okay. Okay. All right. So now we're gonna go into the types of investing that people can be involved in. All right. What type of investing they want to be. So yeah, take us to the promised land.
Sure. Okay. So you want to sort of like approach your investing in terms of what I want to achieve from this. What kind of investor am I? Am I short term, as I said before? Am I short term? Am I mid-term investor or am I long-term investor?
Okay.
So
what are the differences?
The difference is a short-term investor is a day trader. So this is the guy that is going to be looking at charts. The guy or the gal is going to be looking at charts. He's going to be coming in and out of the market, buying and selling almost on the hour, every 15 minutes. It's quite high octane. It's can be quite stressful. You can lose your shirt in a day. You can lose.
So when you say lose
you
your
can
shirt,
you can blow your whatever is in the pot. You can blow that.
So whatever funds you have, it can disappear.
You can blow that in a day. You can blow it in a couple of days. So this risk tolerance is very high. This one I tend not to suggest for people coming into the market, but I think it's important for me to mention it so that people are aware these are the options they have. As they get better and as they become more sophisticated in investing, this is an option for them.
Okay, so as I'm getting my head around this with all our listeners as well. So short-term investing. So if we also visualize it like someone being in a marketplace, a physical marketplace, right? And so basically they've got someone selling oranges over there, right? And they're literally interacting with people to buy the oranges, sell them off to somebody else at a different price. It's that level of interactivity.
Correct.
But now you're doing it from your laptop.
Correct. Or your phone. And it's immediate. Everything is immediate and the price swings can be wild. It can it can go up to 200 now, at whatever time it is now, and then it can drop down to, I don't know, by negative 300 points in the next half hour.
So just give an example, like, hey, here we go, we got some strawberries here, got some strawberries going on here. Strawberries, no, they're £2 for a buck strawberries, £2 for a buck strawberries. You go, yeah, I'll take £2 for a buck strawberries, £2 for a buck of strawberries, and you're like, oh gosh, I just dropped the ball. £1 for a buck of strawberries, we're going to get strawberries over here, right? And it's like, you know, then you got some people over there like, no, those strawberries, no, they're not so good right now. You know, I'm only buying them for, you know, because the price has been dropped. Now you've got these strawberries that were £2, but you have to sell them for less.
Exactly.
Right. So I'm just trying to create an image.
That's
here.
That's a great analogy.
Yeah,
that's a great analogy.
Okay.
So that's a short-term investor, and that takes quite a bit of skill, and it takes a psychological shift as well, because you've got to be able to deal with the losses and deal with the ups and downs, right? But then you got your mid-term swing trader.
So just and that short term, would someone need to leave their job to do that?
No. You can do it. Have a full-time job, part-time job, whatever. And you don't have to be at your laptop and PC all day fixed to the screen. People think that's what day trading is. You know, you watch these movies and they think, no, that's not what it is. The day trading is once you set up your ceiling price, your floor price, your stop and losses and all that good stuff.
Ceiling prices.
Yeah, that is the exit price. That's where you want to exit out, and the floor price is where you're coming in, right?
Okay.
Right. So you got your stop and your losses. So I'm not going to get too technical, but that's basically once you set all that up, right? You can go away, have a coffee, have breakfast, but you need to just monitor it and just make sure it's like a baby.
Easy.
It's not as tough as people think it is, but out of the three, it is the most riskiest, and it's the one you do need to pay attention. If you don't, you can get your fingers burnt. Right. Swing trading, that's over weeks and months. Right. So a swing trader, you're going into the market and you're saying to yourself, right, what is it now? It's June. I'm gonna go in and pick up some, I don't know, Netflix or Zoom shares or Tesla, and because of the analysis and because of research I've done, I'm pretty sure that this stock is going to rise by about 30% by, I don't know, end of July or maybe end of August, right? That's because of all the analysis and stuff that I've done and all the research I've done in the company. Or it could be until Christmas. I could be looking a good 6 months out, a good year out. That's a swing trade, and that is going to depend more on fundamental analysis. So you're looking at the company, you're breaking it down, you're looking at the markets and stuff like that, and you're pulling all that information together.
Okay.
Right?
So it's like because I didn't hide it from any of our listeners that when Deliveroo went public, for me it was an opportunity to get involved to buy shares in the company.
Sure.
And the reason why is because I use the service. I can see that the platform and infrastructure is there to build into something, and it can really develop.
Yep.
So I invested and bought shares in the company for the long term. So that's me doing a bit of swing trading right there.
When you say long term, how long are we talking about?
I'm probably looking about 6 months, a year.
Yeah, that's a swing trade. So if you're looking, some people even going for a couple of weeks.
Yeah,
few weeks, a month. 3 months, 4 months, and beyond. That's a swing trade. Anything I would say over like a year and a half, 2 years, you're now going into long-term value investing.
Okay.
That's like Warren Buffett territory.
Okay.
3, 5, 10 years.
Okay.
Whatever, 15 years, whatever. Yeah,
Gotcha.
right. So that's going into the Warren Buffett
Okay.
method.
I think I might consider that actually. But the thing is, I think
Have both. Do both.
Yeah.
The last thing I would suggest to people, I would learn those two things first, and then if you think you've got the character and the knowledge and the confidence, then go into day trading.
Okay.
That's just my advice.
Okay.
Take it or leave it. By the way, disclaimer, I'm not a financial advisor, I'm not a trader, I'm not regulated by the FCA, Financial Conduct Authority, so I just thought I'd put that out there to everyone just to make sure you guys know where we stand.
Absolutely.
All right.
Thank you for that.
Okay.
So we got a different. So we got a short trader,
Short-term day trading.
Short-term day trading. All right, which is a bit more intense. Then we got a swing trader, which does things over, say, a couple of months, like 6 months.
Yeah,
or so.
it could be a month, 2 months, 3 months, 6 months. Right.
All right. And then we have what was the last one?
Then we got value investing. This is the Warren Buffett method. I've put something up on my Instagram platform. My Facebook platform is coming soon. My Money IQ.
Yep.
So when you go along there, you'll see the kind of methodologies that Warren Buffett used. So Warren Buffett, I'm kind of like a swing trader stroke Warren Buffett type of guy, right? So I'm kind of boring like that, right? I'm kind of geeky about this sort of thing. So I go into the...
I know. I understand you. I feel your pain, bro.
I like Star Wars and Avengers.
Indiana Jones. Indiana Jones.
No, in the bit of Star Trek.
Star Trek. I love Star Trek. Captain Picard was like the best, like and James Kirk, like
I'm just losing the geeky glasses, man.
Sorry,
they're coming.
It just is what it is. We rule the world,
Yeah.
People just don't realize it yet.
That's very good. That's a really good impression. I don't know who that was. I hope it wasn't me.
That is Orville. His name's Orville.
Okay.
Orville I am. Okay.
So,
Yeah.
Warren Buffett, right? So he's kind of like an accountant, right? He kind of sits down. He's like a financial controller. He would sit down and he basically breaks down the company. He looks at the books. He looks at the profit loss. He looks at capitalization, that sort of thing. This stuff, I'm going to pull it all together for you guys. Don't worry. I'm going to pull it together for you guys over the next few weeks. And you kind of strip the company down. You become like an investor, right? An investigator, right? And you break the company down and then you say, right, okay, I think this, because of these attributes, because of these data points, I think this stock is a winner. Or you can look at it and think, nah, this I've looked at it and this stock doesn't look strong enough. You're basically looking at a company. You basically become a business analyst.
Okay.
You look at the company, you analyze it, and you determine whether this company is going to be profitable over the next 2, 3, 4, 5, 10 years or not.
So you have to learn this skill, isn't it?
Yeah, you got to sit down and really become, I will say, become a student.
Yeah.
Become a student. First thing you do, become a student of it. A lot of people throw themselves in, they lose money. The first investment to make is in yourself.
Okay, That
right?
makes sense.
That is your IQ, your education. That's the first investment to make.
Because I mean, in saying that, by the way, good morning, Fatima and Dio from Leeds. Cardamon says it sounds like alien language to me.
I'm really
However,
sorry.
I love learning languages. You know, and I think
We
that's the
spoke
point.
about
We
that.
spoke about
We
that.
spoke about that last time, didn't we?
Exactly. We actually
Yeah, we
spoke
did.
about this.
We did.
And it and it is on purpose, right? You touched on that sometimes for people, for the layman, you know, regular people like us, right, to enter into this, there are these jargons and words to kind of put people off, to say,
Yeah.
let me not go too far.
Yeah, and
Right.
and don't be put off by any of that stuff. Honestly, I left school with, I think, 1 GCSE, dude.
Yeah,
You know, I mean,
you did better. You
if
did
I
one-
can
you
do
did,
it,
you did one better than me.
and I think that was in art.
Oh,
right?
wow.
Yeah. So like, I'm not super brain, right?
Yeah.
I'm telling you guys, anyone can do this.
Yeah.
Seriously, anyone can do this. If you know how to, use certain apps and use the internet, and you know how to do things online, all it takes is a bit of time, bit of dedication, bit of focus, learn the terminology,
Yeah.
right? Which I'm going to give you guys, but I'm not going to overwhelm you with it.
Yeah.
It is learnable. This stuff, it can be done.
It's quite interesting. Shane from Tooting says, good morning. Good morning,
Good
Tooting
morning.
Titan Shane.
Morning.
And so far, you just previously touched on value investing, and I like the sound of that. And the thing about it is many of us, for the regular individual, that we've grown up in a certain culture of of now. It has to be now. There is no delayed gratification. We want things now. And the idea of investing, like, okay, I'm going to release what I have so that something will come out in the long term. Generally speaking, we're not conditioned like that, right? And what you're saying about this value investing is, okay, I'm going to learn a new skill. I'm going to understand different markets. I'm going to become this type of individual. I'm going to get my mind to work this way. I normally like painting, but I'm actually going to take an interest in this type of work, right?
Yeah.
And I'm going to actually take from what I earn, right? Honor God first, have my investment, that I've, and it doesn't have to be much, doesn't have to, you know what I mean? And I'm going to scrutinize a company, and I'm going to, make some professional investments here, and delayed gratification is a thing that is not common to us.
No.
We want security in having things now. We want the pleasure right now.
Right.
But Warren Buffett made it very clear. He showed us a great example. When Coca-Cola was nothing, he took shares in Coca-Cola, and that and other investments paid out in the long term. Has Warren Buffett died? No. But the investment paid off at the time.
You know what's really interesting about this, though? That if someone is having problems sort of like relinquishing part of their salary to say, right, I'm going to have delayed gratification, right? One of the really interesting things is sometimes you've been investing in a company that you like. So say you've got Apple products, you want to invest in Apple. I gave you guys a platform, by the way, the link's on my Money IQ Instagram platform, right? So I gave you guys a link to an app, and there's another app that you can use where you can enter the market at relatively low, I'm talking 10, 20 quid, right? And you own a fraction of a share, right? That's point number one. Point number two is, say you like Apple, if you like Zara. Who shops at Zara? Anyone shop at Zara online? I don't know, right?
I know you do.
Zara, I don't know, Mercedes.
What about Primark?
I don't know if I haven't seen Primark floated. I don't know whether they're IPO'd yet.
Yeah.
They might be.
Yeah.
It's not one that caught my attention. But what I'm saying to you is, say you have one of these products, services, or shops that you use, Netflix, Zoom, Google, whoever, right? And it's one of your favorite companies. One of the motivators as well is that if you do your research on that company and that company comes out good and you think, okay, I've done my research, the books are balancing out, their profit and loss is looking great, you then own part of that company.
Oh, that feels nice.
And then you can actually say to yourself, well, do you know what? I shop here and I own part of it. So hold on, I'm shopping at Zara. I own shares in Zara. They went up a few hundred quid over the past few months. So I bought this top for free. Right? right?
It's true.
So it's like you know what I mean. So that's one way to sort of like look at it. So if you've got your favorite, I'm not saying that's going to happen in every instance. Sometimes you lose money, right? I've got to put that out there. But say Zara is one of your favorite shops, and you buy shares in Zara, right? And then you're shopping there, and you see the price rising. You just bought yourself a top. You bought yourself something for a wedding reception, or and you're like, wow, look at that. So I spent money, and then I got it back.
Wow. So if I do that for Netflix, I'm like,
kinda.
Yeah.
So you're paying like £7 a month.
Yeah.
And then your share price has gone up by God knows how much. I'm like, so what you're telling me is I'm getting it for free?
Right, like the plus extra, right?
Right.
And the thing is that Maurice is hit the nail on the head, right? We're the consumer.
Right.
We're gonna consume things anyway. Might as well own a piece of the company.
Right.
This is a whole different type of thinking, you know. Selena Green says, "I'm ready to start trading today.
Let's go.
Long term trade 212." Yep.
Trading 212.
Trading 212. So like, look, the listeners are doing it. They're doing it. They're going in. And look, definitely you have to go and see Maurice's Instagram page because
I'm putting some really good stuff up there. I'm putting some pointers up there for you guys. If you guys want to just have a snapshot of the market, or you just want to know what's going on, and you want things to be explained like layman's terms, simply. Anyone can grab this. Anyone can get it. I promise you.
Wow.
I absolutely promise you.
Yeah, Miss Mildred from South London, she was saying how, like Cardamon was saying, that we heard when we started this, she was like, this new series on Financial IQ, she was like, there was some words that I've wanted to invest. I didn't know if it was a scam investing or if it's gambling or these kind of things. She had all these different doubts, but she knew she wanted to get into investing, you know. And then she said when the program was going, there was some words I wasn't sure about, you know, but I could see that it's good. And she went to your page, and then she saw your videos and stuff like that, and she was like, it made things very clear for me, you know. It's very clear. I really want to get this. Is very good, and my doubts are gone, and you know, so it's really amazing. Also, it says here, Mijuli says Apple products. I think Mijuli wants to she uses a lot of Apple products, so he's like, why don't you get Apple to pay you back? You know what I'm saying? But this is all very interesting.
One of the things we're going to be looking at as well is when often people won't know when to buy, or say, well, I'm just going to buy Apple. Well, if it's right at the top of the market and you're buying, and then you buy there and then it starts to lose money, that's because you bought right at the top. So another thing that we're going to be touching on is when to buy, and that is going to require you to look at the marketplace that you're in. It's going to require you to do some boring stuff. I'm sorry, I apologize.
You're gonna have to nerdy graphs and all that kind of stuff, and like numbers and things like that.
And watch Bloomberg and pick up some of the financial newspapers and stuff.
Okay. It sounds interesting. You know, numbers. We all love numbers. Right?
Yeah, you're gonna have to get a little bit nerdy. But if that puts money into your bank account,
absolutely,
you'll be a nerd with some weight behind you. Right?
You know, when I was a kid.
Yeah.
I learned how to make sound effects under my armpit.
Right.
I don't know if you ever done that. Like you go woo-doo with the armpit.
I still do it.
You still okay? Yeah. So like I never made anything out of that. You know what I mean? So we learn certain things that don't add anything to us, right?
Useful skill though.
I don't know what useful skill you got from that, but
you make the kids laugh. I mean,
yeah. That helped in the playground.
Not on non-public transport. That can.
Yeah, but as an adult, like
that can make people move away from you. So I wouldn't.
Okay, you know what? Let's move on, man. I shouldn't have used that example. I didn't expect we'll start opening our hearts like that. But yeah. So so the different things that people learn, we take time to learn certain things, but not everything adds value to our life, to our quality of life, to our asset quality. So you've literally touched on 3 different ways, types of investors that we could be, which allows us to see that there's different options for us, right?
Sure.
There's different options. There's lower risk options. So you've got short-term trader, swing trader, and a value investing. Yep. I really like the sound of that last one, because I like the marathon. I'm one for the marathon.
Real wealth is built over time. There's difference between being rich and being wealthy. Being rich is you're a heavyweight boxer, you go in a ring, you acquire a lot of, money, and then within a generation it's gone. But some boxers don't even pass it on to their kids. Some sportsmen don't, and I hate to use boxing as an example, but you do see that a lot.
That happens in sports.
You do see it a lot in sports.
In
A
football,
lot of them are waking up now, but wealth is that 10, I call it 10G wealth, right? That it goes to the seed of your seed of your seed of your seed of that Abrahamic wealth, right?
Yes, let me pass
them 10 Gs, those 100 Gs, 100 generations down, and it's all
keep on passing it on. It's powerful things, them things, they are wonderful things. We need to have that kind of mindset.
That's it.
There's sometimes we are missing the mindset. Thank you for that. So look, guys, you're going to be speaking about, we've got something else that we're going to be sharing with you in just a moment, guys, which was about dividends. Yeah, so we're going to be touching on that to understand how it works, okay? But I hope after this conversation you kind of understand the kind of choices that you have in terms of getting involved into investing, all right? And maybe an entry-level way to look into it, but obviously check Maurice's Instagram. I've put it here on the live chat. Make sure you check it out like Miss Mildred and all the other crew did, all right? So we're going to go for a very quick timeout. Julie says, bring on Maurice. I'm ready to invest long-term. Okay.
Great.
So, guys,
Love
check out his My
Money
Instagram.
IQ Instagram.
My Money IQ. I've posted it
Facebook
here.
is coming.
I think someone just snap it off this. Okay, there we go. I got it. All right, My Money IQ on Instagram. Okay, but we'll go some more music very quickly, and when we come back, we're going to be talking about
dividends.
Dividends.
Indeed.
Okay, guys, we'll be right back right after this. In the UK right now, the sun's shining, the air feels clear. It's so nice. We got
So
good
good.
company. I don't know how things are where you are, but I hope that these sunshine vibes are reaching you wherever you are on the planet right now. Okay, and we're just coming to the final part as we have our interview with the one and only Maurice Innis, increasing our financial IQ today.
Good morning.
All right, just continuing on. So what we're going to be looking at right now?
Okay, so we are going to be looking at dividends.
Dividends,
right? So a lot of people don't know what that means. Dividends. What is dividends?
Yeah, dividends.
Dividends is so when a company's doing a stock that you've invested in, company you've invested in is doing very well. What they tend to do is reward their investors that have backed them with a payout, and these payout are called dividends. These dividends can be paid. Some only pay twice a year, some pay 3 times a year, some pay every month. So it's a very interesting concept in that you've invested in a company, and I as I said to you before, we had conversations before. The great thing about dividends is, think of it like this: you've invested in a miniature 1-bedroom flat that you're renting out.
Okay.
So you've bought this stock, right? So the stock is going up in value. So the 1-bedroom flat, this miniature tiny 1-bedroom flat, is going up in value. But hey, guess what? It's also giving you a chunk of money every month, right? So as the stock rises and as the company gets more healthier, as the company performs, it always depends on the health of the company. If it's a healthy company and you've done your research to ensure that it's a healthy company, and you've also research that this company does indeed pay dividends. Not all do. Some do not. So you got to determine, okay, does this company pay dividends? Yes. How often? Does it pay it every month? Does it pay every 3 months, every 6 months, whatever? You're winning twice over, because you're seeing the underlying value of that stock rise, and then every couple of months you get a check through the post.
Yeah, we like the sound of that.
And that is just beautiful, because you could be, and those are the old days, by the way. Now that we've got the digital platforms, you don't get a check through the post. You just look at your account and you say, oh, you get a little ping, a little notification. Oh, some funds have just dropped into. Very nice.
Oh, so it'd be like this. Hi, can I have a bottle of water, please? Yeah, sure. Okay.
Ping. Yeah, make that champagne.
Yeah.
I made that.
I'll go for a 2-litre bottle, please. 2-litre bottle, please. Right,
or make that a vintage.
A
Make that a
vintage,
vintage
make a
wine.
vintage,
Make
forget
a
the-
vintage.
forget the water.
Hold the water. Yeah, right.
Okay,
Yeah,
so,
so it's literally, it's I always say to people, it's like owning a tiny miniature piece of real estate where you've bought the real estate, you've got rental, you've got the value of the real estate going up, and then on top of that you've got rental yield coming in every month or every couple of months. The only difference is that not all dividends are paid out the same.
Yeah.
Some are every couple of months, some are every 3 months, some are every month, some are every 6 months, but you're getting money that you would have not otherwise have got.
This is actually quite mind-blowing, guys, if you really think about it, because many times people think about getting involved into the property market, all right? And obviously in London, the property market is a little bit different because there are lots of rules that came about after 2008, etc., etc. So a lot of things have happened. Well, and even with property, after you take the taxes and all those things that you have to pay, you're probably looking at a certain, it's more of a long-term investment thing of having an asset. But in terms of getting a payout from it, it might not be that great after you take everything out.
And the entry for property right now is quite steep.
Yeah, you're looking at what, 25k?
It's quite steep. Even though I read an article yesterday that the government have a new directive where if you are a first-time buyer and you're buying a purpose-built property, I think you get 50% off, which is quite amazing. That's
50% off?
Yeah, 50%. I forgot to bring the article. I was meant to bring it.
50% off?
Yeah, 50 cent. Yeah.
So if the property is like 400,000, you get it for 200,000.
Yeah.
We need to scrutinize this information.
I need to scrutinize that too.
Yes, we need to scrutinize this.
But anyway, I mean, the entry is still pretty steep.
It's high, yeah.
It's still pretty steep. And the beauty of stocks is that you can go in with quite a low entry.
That's right.
And you can still benefit from, if you've chosen a dividend stock and you've done your research and you've made sure that this company is a stable, profitable, well established,
like a bank
platform. It could be any sector. It doesn't matter. It could be the technology sector, it could be the oil sector. It doesn't matter what sector it is. Just ensure that some sectors are firing off more than others, right? So last year, what fired off? It was the technology, sort of not the physical technology, but the sort of like cloud space, streaming. Right, it was the Zooms, the Netflixes, it was that kind of technology space. It wasn't so much the Apple physical products that done it.
But those cloud-based services,
right? It was the clouds and the streaming. The Spotify. Those are the guys that really. Shopify. If you people out there that like selling things online and stuff, those ones like just zoomed. Having said that, the newer type of stock coming onto the market don't tend to pay dividends, right? It's usually the old established guys. It's usually the Coca-Colas, the McDonald's, the Johnson and Johnson, that type of stuff, right? But whatever you do, just make sure that if you're choosing a stock and you've done your homework and you want a dividend stock, ensure that it is paying dividends. I'll show you ways of how you can check how often they pay the dividends. There are sites that you can go to. One of them is Yahoo. You mentioned Yahoo Finance and stuff like that.
I was checking it out.
And
I've been getting lots of updates with Yahoo Finance. I've been really enjoying it.
Yeah, good,
and
right?
It's really making me understand how the market works and how to kind of get a visual on what's happening in these different markets. And then when I have the app now, when it comes to investing, I can relate to what's going on.
Right.
So it really is a step-by-step process to kind of learn these things. But the great thing is to know that they exist, that they're out there, and we shouldn't be afraid.
Don't be afraid
of getting involved.
Anyone can learn this, guys. It takes a bit. It's like anything. If you want to learn a language, you want to learn German, you want to learn, Fala Portuguese, whatever it is, with a bit of time and dedication, you can learn it. The other thing I wouldn't say about dividends is once you've got your check through the post, or once you've got that notification ping, say, hey, we've just paid you 50 quid for like doing nothing, right? Once you've got that, you then don't go and blow the money. Take it and then go and buy some more stock.
That makes
go
sense.
Go and buy into another sector. Say, go and find another dividend stock. How about this? Find another dividend stock, right? And say you got 50 quid dividends. Let's pay you 50 quid dividends next month. You go and do your research, which is the geeky stuff, right? We covered.
Yeah.
You go and find another dividend stock, right? You put 50 quid into that, and then that starts paying you dividends.
Oh, wow.
and then you keep going. It's right. You keep
That's
going,
it.
and then you find another dividend stock, and it's all long term as well. These things, it does take a bit of time for you to see the fruits of your labor, right? But it's like I said, real wealth is built over time. But if you think about it, most people think, oh, you buy stock and you got to wait for it to go up and then you sell it. No, you do get paid dividends as well, depending on whether you chose a dividend stock. And you take those dividends, don't blow it, don't go to Primark and blow it, go to Nando's,
Reinvest it again.
go and reinvest it in another dividend stock.
So that's what those checks were that I was getting all those times.
Yeah,
like
yeah,
they
that's
were
what it
dividend
was.
stocks from an account that I had from when I was a boy. Wow, that's very interesting. You know, okay, that's dividend stocks.
Yeah.
So for someone who's looking about getting involved in getting dividend stocks, they can like Google it. What would they do?
So again, this is going to come into the research. So this is going to be all part of your research. And some people don't want dividend stock. Some people just want the growth, right? So I will be putting things on my platform that will tell people the difference between a growth stock and a dividend stock. A growth stock is just you put your money in and it just grows. It just grows and grows and grows, and it gives you a way better rate than the interest rates that's out there right now, right? So talking 12, 15% in some cases and more, right?
Wow.
A dividend stock will do the same, or maybe a little bit less than that, a slower growth, but you'll be getting that residual, right, over a period of time. And there are sites that you can go to.
Okay, someone asked here, anonymous, I don't know if it's a real question or not. It says, how about scalp trading for the sprinters?
Scalp trading, so that's like day trading, basically.
Okay.
That's day trading. Yeah, I mean, you can scalp trade, and you know, you're getting into the market and you're taking it's gone up by a few percentages, and you take your profit and you exit, and then you find another trade, or you wait for that trade to go down, and then you go into that trade when it's gone down, you buy it, you wait for it to go back up, you can do that. It takes some discipline. You need to be slightly more disciplined.
So you know, when you say go, obviously when you say go up, I know that you're talking about the charts and
the chart. It's actually
the value,
the price.
the value
It's
of it.
literally the price of that
Piece of stock.
that asset class that is moving up.
All right. So look, guys, there's been quite a bit of information this morning, and this really is solid food, especially if you're learning to engage in something that's very new. I feel that this is quite robust information, quite a few things to cover, but that's why we're here. We're having this show, okay? But I believe from what you've been hearing today, it's something that anybody can get involved in if they want to. The resources, the information is available if you want to access it, you know? So it's about, going, Alice in Wonderland, that rabbit hole, going down that rabbit hole, start having things revealed to you as you go along, start taking the steps. We've got the website the Instagram that you have.
Yep. My Money IQ.
My Money IQ. All right. And literally we're going to be posting that. I put you can email produce@libertyradio.co.uk if you prefer a link. If you're having trouble finding Maurice's page on Instagram, and we can send you the link directly like that. All right. But definitely keep in contact with us and continue to do your research. And I think the information that you got on your Instagram page, Maurice, sounds really, really powerful.
Yeah.
And definitely I'm going to be looking up more onto it myself, because I know you're updating it with a lot of new material all the time.
And just one thing, don't throw like all your money in. If your knowledge isn't there yet, don't go crazy. Don't get sort of overexcited and throw all your money in. Take a measured step, right? You can go in with small entries. You can go in with £30,
something
£40.
that if it goes missing, you won't cry.
You're not gonna, right? You're not gonna. It's not gonna be the end of the world, sort of thing. But as I say, the first thing is knowledge and education.
Absolutely.
And as you going with small chunks, and as you go along the way, and as your knowledge increases, right, you will then feel more confident to put in more, and you're going to be very measured and very sort of like sober-minded in your approach. And as you feel more confident, and as you feel what you're doing, you're gaining more skill, you're gaining more understanding of all of the terminology. Then you can start saying, right, okay, I think I know what I'm doing now, right? And then you can start increasing your capital.
Sounds powerful.
Yep.
All right, guys. So baby steps here, step by step. Maurice is letting us know what's out there, what's available. Robert Kiyosaki has the cash flow quadrant. Most people we know with an E, with a S for
self-employed,
E for employed,
I for investor, B for business owner,
B for business, and S for self-employed. Yeah, you know, and most people are an employer and employee, and they just stayed as an employee forever.
Employee and self-employed, you cannot go to the Bahamas for 6 months because it requires you to be physically at your desk. You can't go to your boss and say, "Excuse me, boss, I'm going to Hawaii for 12 months, 6 months." No, you can't do that because your boss will say, "Sorry, mate, we need you here." If you're self-employed, you run a hairdresser, same thing. If you're an investor or business owner, you've got your CEO running the company for you, or managing director running the company for you. He calls you up. "Hello, profits are up, customers are happy." Click, put the phone down. You go back to your pina colada or whatever you're drinking on the beach, right? And as an investor, pretty much the same thing. You're investing your money, and you could be in Japan, you could be in Miami, you could be anywhere in the world, and it's still churning over.
And you know, and this financial IQ that we've been having recently, I mean everything's had its time, you know, but initially I was looking at the cash flow quadrant. It sounds funny, but don't worry, it's very, very simple. I always kept thinking, you know, I'll start getting into investing once I've got the business set up and established. You know what I mean? Because then I'll be able to do some real hardcore investing. But the thing is, we can start from wherever.
And actually, starting a business is actually slower than the investing. Do you know what I mean? Because you've got to set up this, you've got to set up website, get the accountant and tax, blah, blah, blah. But because the platforms are all there, all you really need is knowledge, and then work on your skill, improve your skill. And because of the way the world is now, you know what I said to someone the other day? This is the worst of times and it's the best of times. It's the worst of times because of what's going on in the world, and this is going on, and taxes and COVID-19 and all this sort of unemployment. But it's also the best of times because there's never been a better time for you to use these pieces of technology and leverage it for yourself and invest, right? There's never been a better time. Big companies are using technology against you. What you got to do is say, you know what, let me get some cloud technology and iPhone and get me this Trading 212 and this free trade app, and let me fight back. Let me get my sword and shield out and my helmet, and let me fight back and stand my ground and, you know, make a stand for myself and build my future.
Love it.
Right?
Love it. Love it.
Let's go for it. Let's get it.
All right, guys. So look, thank you so much for that, Maurice.
You're so welcome.
The time's up. Maurice, you've been absolutely awesome.
Thank you, so Eddie. It's a pleasure.
And we've got some huge bangers for next week.
We do. I haven't actually schemated everything out yet, though, but we're going to expand a little bit more on dividends, and then we're going to go into how you actually break down a company, how you actually go into find out what is a good company, what isn't a good company,
that'd be really good.
And looking out for scams as well.
Fantastic.
Right?
That's going to be absolutely awesome. All right, guys. So look, we got all that to look forward to. That's going to be next week, Tuesday. Tomorrow. I love you tomorrow. All right, we're going to have Ronald and Petrina joining us, where we're going to be doing a book review on bulletproof dating. All right, so it's been hardcore. You don't want to miss that bulletproof dating stuff, that book review. Seriously, if you're married, if you're single, in it, Hugo, it's been going down, right? It's been going deep.
Oh, it's great.
Literally.
And tomorrow is just a day away, you say.
Yes. Exactly. Yes, exactly. Trust me. All right, and also Ronald's going to come with the excellent, extensive nutrition tip for tomorrow. It's going to be absolutely awesome. So guys, make sure you wake everybody up, get everybody involved. 6:30 a.m. the breakfast show is going down, and we're just going to add more value to you. Guys, that's it for now. If you're watching this program on YouTube, make sure you like and subscribe the page, and you've got the links to Maurice in My Money IQ. It's all going to be in the description, and just keep following up. And if you are on YouTube, catch us live Monday to Thursday on libertyradio.co.uk from 6:30 a.m. And besides all that, guys, if you want to catch it on YouTube, visit YouTube, Robust Life TV. So we're just all connected everywhere, or just visit Instagram, Robust Life. Okay, guys? So let's stay connected, stay powerful, stay robust, and I'll see you all tomorrow at 6:30. By the way, Captain Hugo, thank you as well. Almost forgot that one. Ciao for now, everybody.
Ciao.
See
Ciao,
ya.
Bella.
Connect online Monday to Friday with special guests for inspiration, motivation to start your morning right. Music, banter, fun and laughter. Connect when you start your mornings with The Breakfast Show. Only on libertyradio.co.uk. That's right, The Breakfast Show is back. libertyradio.co.uk from 6:30 a.m.